In this video, we want to talk about Expensify, and they had an accidental rally today, caused by Jim Cramer's comments during an interview. He later clarified, however, that he did not recommend the stock. Nevertheless, some investors ran with that story, and as you can see, price ended the day a little down from the highs. This is actually the weekly chart, and one thing I want to point out before we go down in time frames, you have this nice weekly sell level at $4.50. Weekly sellers at $4.50. Now scrolling down to the daily chart. Again, on the news, we had a gap and initially a go before there was some profit taking place towards the end of the day, and it left this candle with some indecision between the buyers and sellers after the gap higher. Now, before we continue with the analysis, let's actually get into the news. So, Expensify stock was higher on Tuesday after Jim Cramer accidentally triggered a rally for the cloud-based expense management software platform company's shares. During an interview with Brad Pitt for the upcoming F1 movie, Cramer mentioned that Expensify sponsors that the fictional F1 racing team in the movie. He told the viewers that if they were going to remember one stock in the interview, it would be Expensify. Now, following the shares rose on heavy volume, actually 17 million shares traded hands against the company's daily average volume of roughly 600,000 shares. So, that was up at least 8x. And, although Jim Cramer is not necessarily right, you go against his trades. In this one, folks also like to take advantage of his signals because he does move the markets. Now, here's what he told Seeking Alpha later on. Guys, I'm not being facetious about a company called Expensify. All right, I did not tell people to buy. I'm just saying they are one of the sponsors, and Apple was brilliant to have sponsors come on, and I am not recommending the stock. Now, despite the clarifications, again, the shares were up roughly 33%. However, the shares are still down 21% since the start of the year. Now, again, this is the daily chart, and you can see price is butting up against this 200-day simple moving average. Anything above it typically signifies a secular bull market. Anything below it is a secular bear market. And what I want to point your attention to is this $2.50 level, as we have support, now resistance, which should serve as resistance again until it's no longer resistance. But in order to break this level, this band, you need to see another high volume candle if price is going to move higher. Going down to the 4-hour chart, we ended the day, I'll say, on a positive note. The last 4 hours of the day, we saw a green candle. So what will be interesting to see is how price action transpires tomorrow. Right now, this is the candle in control. And what do we mean? What do we mean by the candle in control? If you start to see candle closes above, that signifies price is going to move higher. If you start seeing candle closes below, that means that you're going to potentially close this gap. As this is the candle control, the high and the low of that candle you want to pay attention to moving forward. Thanks for watching. Subscribe. Please like the video.